In this video, I'm going to show you the easiest way you can find a higher time frame bias and never get your bullish or bearish bias wrong ever again. So as you can see here, we have basic market structure with a structural low and a structural low down here, structural high, structural low down here. We also have some trend line or some equal highs over here. So now we look at most recent price action, and the way you form a bias is very simple. What you're looking for is a higher time frame fair value gap. So in this region over here, we have the last candle. I always use the last candle before the fair value gap over here, and we can see here price hasn't quite filled this entire fair value gap over here. On top of that, we also have some fair value gap resting over here in this region. And of course, we have the fair value gap over here. So what's going on here is we've basically filled this gap. And so I do expect price to come up to this region and then eventually come up into this region. So the way you form a higher time frame bias is actually easier than you think, because what you're doing essentially is you're looking at the structural low and the structural high over here. And you're projecting the Fibonacci to from the swing high down to the swing low like this. So what's happened over here in terms of our bias is quite interesting, where we have filled the entire fair value gap over here, and we've also come and re-entered this area over here. So this structural low is a strong low, right? It's been left intact. And so because of that, our bias is very much bullish, right? I do expect price with Donald Trump in power to blow through this zone and to eventually continue making all-time highs. The reason for that is very simply these are weak zones, right? So these zones were respected. So these zones didn't break anything. Because they didn't break anything, they're weak zones and I don't expect them to hold. So expect an all-time high on Nasdaq, Dow Jones and the S&P 500.